Dear Professor, our A23 group's topic is comprehensive SWOT analysis of Xiaomi Corporation. Xiaomi was founded in 2010 and originally started as a local smartphone company. Over time, it has grown into a global alert ecosystem player. Its core strategy is what Xiaomi calls the smartphone plus alert model. One smartphone acts as the entry point and other smart devices connect through in a safe ecosystem. By 2024, Xiaomi had become one of the world's top 5 smartphone brands and had more than 700 million connected lot devices worldwide. Southeast Asia is especially important for Xiaomi's growing, particularly in countries like Malaysia, Indonesia, and Thailand. This expansion is supported by Xiaomi's strong online presence on platforms such as Shopee and Lazada, combined with its offline Mi store network. Because of the existing become strategic and regional focus, Xiaomi is a very suitable case for further financial and strategy analysis. Over the past decade, Xiaomi revenue has grown steadily increased from about RMB 96 billion in 2015 to roughly RMB 282 billion in 2024. That represents a solid long-term growing trend. Although smartphones are still Xiaomi's main source of revenue, their share has gradually declined to around 57%. At the same time, revenue from lot and lifestyle products has expanded significantly and now accounts for about 30% of total revenue. This shows that Xiaomi becomes less dependent on smartphones and more diversified. In addition, Xiaomi growing margin has improved to around 17% and R&D spending has increased to 4.6% of revenue. This indicates that the company is investing more than innovation and long-term system development. Overall, Xiaomi's financial performance reflects a clear shift from smartphone-focused business towards more balanced, alert-driven going model.
Moving on to the SWOT analysis, Xiaomi's core strength lies in the unique smartphone times auto engine strategy. This ecosystem creates a strong data feedback loop. Additionally, our online to offline O2O retail model has successfully expanded our market share here in Southeastern Asia. However, we identify significant weaknesses. First, the company is still heavily dependent on smartphones, which contribute about 57% of total revenue. Second, due to its cost leadership strategy, Xiaomi's operating margin remains low at around 6%, which limits its ability to compete in ultra-premium segment against giants like Apple. Looking at this external environment, the biggest opportunity is right here in Southeast Asia. The IoT and wearable market in the region is growing at 15% CAGR. Furthermore, the RCEP agreement helps in digital chains, reducing costs. We also see huge potential in Xiaomi's entry in EV, electric vehicle market. Finally, regarding stress, competition is intense. Xiaomi faces pressure from some and Apple in high-end markets and traction in budget markets. Therefore, our analysis suggests that Xiaomi must pivot from a price-driven model to a value-driven one to ensure long-term sustainability.
From 2015 to 2024, Xiaomi's revenues grew from RMB 96 billion to RMB 282 billion, with a 13.4% CAGR. Revenues structure has shifted. Smartphones dropped from 82% to 57%, while lot rose to 30%. This shows Xiaomi is moving from a single product company to an IoT economy system firm. R&D spending increased to 4.6 points, supporting long-term innovation. Strong IoT ecosystem, cost-effective innovation, solid C presence. Weakness, high smartphone dependence and low operation margin. Opportunities, fast-growing C-lot market, EV and smart mobility, RCEP benefits. Third, intense competition, trade restrictions, and currency risks. Xiaomi's ecosystem improves customer retention and cross-selling. However, low margin means Xiaomi must move from cost leadership to value upgrading. Key strategies: increase R&D to 5%, diversify supply chain in Asia, and push affordable premium products. Overall, Xiaomi is a relentless AIoT leader, but future growth depends on innovation and premium positioning.